Tech, big underperformer, as we've been discussing. The Nasdaq closed well off the lows of the day, though, but still down more than the other major averages and down around about 2.2%. Let's bring in Brent Thill from Jeffries. Brent, always good to see you. Does it make sense to you when we're talking about fiscal fears, macro concerns, China property concerns, that the big cap, mega cap tech names sell off?
Yeah, I think so, Wolf. I mean, you had huge outperformance, right? If you look at the software index, the IGD, it's up 15% year to date, right? It's done better than most of the broader market. So if you think about tech, right, you've had a huge move in Google, Snap, number of these names. And, you know, it's okay to take a pit stop, right? It's okay to take a breather. And I think they did need a breather. Some of these multiples have gone into the stratosphere of levels we've never seen in tech. So, you know, naturally, when you get a day like this, you're gonna feel it harder in tech. But again, it's not over. We think there's some great stories that are doing very, very well, and we think again, this is more of a short-term pit stop than a change in terms of the trajectory where tech is going over time.
Of course, one of the flip sides, Brent, is that many people have been worried those valuations would be pressured when rates go up. Today, rates came down. So again, talking just to those headline factors, which is more significant to you, the kind of positive general sentiment towards markets and growth, or where rates are?
I think more market direction, but yeah, as rates have gone lower, you've seen, you know, a lot of these assets do very, very well. So I think it's a combination. I think we're just in a general holding pattern where valuations in many of these tech names have ripped. Ultimately, investors, you know, are looking for a better entry point. Again, anytime tech is sold off, the playbook has said, you know, buy more, and that's worked. On a 1, 3, and 5 year basis, we've had incredible returns across this group, so we don't believe that that's going to end. We're not effectively trying to defend our turf of tech being tech fundamental analysts, but it's been the right call, and that's where the outperformance is. You look at Google up, you know, 50 to 60+% year to date. I mean, these have been incredible moves. It's okay to take a break.
So what are your top 3 on the list to buy when you do see a better re-entry point?
So in internet, we like Amazon, Google, and Snap. And then in software, we've continued to highlight Microsoft, Adobe, and Intuit. And I really like this Intuit transaction they just did with MailChimp. It really gives them a position in the front office, and that's been something we've been arguing for years that Intuit needed. So now they have a great asset there. So those would be 3 names on both sides that we would like on software and internet.
And if things do worsen in China, even though it's stemming from the property market, not the tech market, or at least this week's news flow is, which are the names with the highest exposure there or highest correlation to what's going on there that you'd steer clear of?
So many of the names that we covered do not have any exposure to China. They don't sell into China. So in software and internet, we don't have any U.S. based exposure that has tremendous exposure. Obviously, I think as things have suffered there, perhaps investors have felt more confidence with the U.S. market. So it could build and strengthen the position for some of these mega cap names across our coverage. But we don't have direct exposure to a lot of names that sell into China.
Brent Thill, good to have you here today. Strong selling across the Nasdaq, especially big cap tech.